eCapitol News Director Sean Ashley joins us with more on budget negotiations and other developments at the Capitol. Sean, another plan to raise revenue was floated at the Capitol on Thursday. How would that plan work?
Yes, this plan was brought forth by State Auditor and Inspector Gary Jones, and it's not too unlike some of the things we've heard thus far. It includes an increase in tobacco taxes, particularly on cigarettes, but only a 75-cent per pack increase. It also involves raising the motor fuel tax, 3 cents on gasoline and 6 cents on diesel. And then it also includes a change to the gross production tax discount rate, which currently is 2%. This would raise it from 2% to 5%, bringing in a bit more additional revenue. House Democrats have embraced this idea and actually added a plank of their own, a bill that would limit the amount of itemized deductions taxpayers could take, except for charitable contributions, which would be excluded from the calculation. When all those things are added together, you're looking at an excess of $550 million, which could be raised.
What's been the reaction of Republican leadership to that plan?
House Majority Floor Leader John Echols said that House Republicans would like to take a look at the plan. However, sort of the caveat he added to this was that it was too late in the process for the bill for any bill that might come about to affect the current fiscal year, the fiscal year 2018, which ends June 30th. So it would be something that would benefit the state in terms of revenue in fiscal year 19 and beyond. At this point, however, Republicans have yet to formally say yay or nay on the plan, or whether they might use it as the basis for further negotiations and coming up with something slightly different or entirely new.
So is there a possibility that cuts could still be avoided?
Probably not, and that was part of House Majority Floor Leader Echols' point, was that we are currently so late in the current fiscal year that anything which is passed now would not generate enough money to avoid the various cuts that are going to be implemented. Those cuts amount to about $42 to $44 million and are in legislation that could be considered next week. If any revenue-raising measures were approved now, they really wouldn't take effect or begin to generate revenue until very late in the fiscal year, and not enough revenue to offset the cuts.
Legislative committees also approved a bill Thursday to provide funding to the state's medical schools. What's that about?
This is a situation where the state has gotten crossways with the federal government. For a number of years, the state has used some Medicare funding to support its medical schools under a waiver which it received from the federal government. However, an audit by the federal government revealed that that waiver had not been renewed for a number of years. As a result, the federal government stepped in and said, hey, wait, you can't be doing this. And they took back some funding they had already given the state, approximately $31 million, and said you will be receiving no more of this funding in the years to come until there is a waiver in place. At this point, it appears they're not likely to approve that waiver. So for the current fiscal year, $31 million is needed so that the medical schools can make it through the remainder of the fiscal year. And as we look forward, state legislators are concerned that various accrediting agencies for the medical schools might not look favorably on the fact that the schools don't have adequate funding. So the legislature is agreeing to put $110 million into the schools in fiscal year 2019, which begins July 1st.
Sean Ashley with eCapitol, thanks so much for sorting all that out for us.
You're very, very welcome.